Hey, it's Nate Dodson. I'm here today in the beautiful San Diego, hanging out by the ocean, meeting with really one of the best lenders and debt operators in America, Mr. Oliver Austria. He's been running wholesaler operations for lending platforms. He's been a direct lender himself, as well as managing, raising capital, and doing his own funds. So kind of a jack of all trades when it comes to the real estate and the lending world, Mr. Oliver Austria.
Good to see you, old friend, Oliver.
Great to see you as always, Nate Dog.
So just a little bit of backstory for them. Man, I've known you forever. Maybe a dozen years?
Dozen years, that sounds about right. Yeah.
Started out by doing some investment deals. You're heavily into the hard money, the private lending and all that, which totally want to learn a lot more about now. But I remember we started out with some doing some different funds.
Yeah, we had some good times.
Yeah, and then I know that you and your partnership kind of broke up and you've gone some new routes.
Yeah.
What the hell are you doing now?
Yeah, well, doing a lot of the same, a lot of different things.
I have no clue what that actually means.
Yeah, so still in finance.
Okay.
Arranging financing for real estate investors all over the country. We're helping them grow, helping them really just scale up. And so when we first met, we were focused just on, me and Ryan were just focused on Eastern Massachusetts, kind of that, Boston area. Working with individual investors, and then you, actually, to your credit, you gave me the smack in the head. You said, well, you should probably be doing it in a fund.
Time to step it up.
Time to step it up.
I mean, that's what we're here for, next level in it.
Yeah, so, Nate has given me a lot over the past few years in helping grow my business. But yeah, it was that moment that we started really just scaling up and thinking bigger and doing it in a big way. So that was years ago. Fast forward a few years, started to work with more institutional investors, private equity firms, groups that were focused on deploying capital for pension funds and endowments. So really transitioned the model from a capital perspective from individual investors to institutional crowd. Okay, and what that means is family offices, hedge funds, private equity groups. Specifically as a conduit. So we set up our shop as a conduit to originate loans and then ultimately sell these loans off in bulk or on a one-off basis to these different investor groups. And we're doing it all over the country. And initially we were doing just residential.
Can we kind of stop so I understand that a little bit better? So you make the loan or you buy a loan, who's funding it? Is the institution already funding it? Or are you getting your investors to fund it, to close it, and then transferring it or selling it to the institutions?
I have a line of credit with a couple different banks, and we use that line as a means to fund loans that fit the box.
Okay.
So it's dry powder for us.
Yeah.
So once we decide that we want to fund the loan, we fund it off our facility, and then ultimately sell them off to these various groups that have raised their hand and said, "Hey, I like this loan, I like that loan, I like them all." Send them all to us.
And for your business now and like higher inflation time, we're talking literally September 2022, what does that box look like if I'm a borrower looking for money?
Strictly residential bridge, value add, ground up construction. Today, it's all of that and small balance commercial up to $10 million. Okay. It also includes a heavy component of net lease build to suit. So this is a new addition that I'm very excited about, and we'll probably start doing a lot more of across the country. So a developer comes to us and says, "Hey, I'm a preferred developer for a major national brand, say Starbucks, Chipotle, McDonald's, whatever have you. I need to acquire the land and build the restaurant or whatever it is. I have a long-term lease with Starbucks and I'd like a loan." So the unique thing that we do is we provide high leverage on these loans and we provide an all-in package for these developers to build out their pipeline of restaurants or urgent care facilities or whatever it might be. So I'm very excited about that because it's a higher level sponsor, very sophisticated, and they have a pipeline of deals. A lot of these brands, they have a mandate to grow, by X number of units every single year. And when you have a developer that has a pipeline of deals, that just means that we can focus on a core group of sponsors to grow our business.
Do you work with any, like, I'm trying to build a rental portfolio, or I've got a 15-year loan that I'm trying to take down, that it is owner occupied? Are you dealing with those areas at all, or is it strictly commercial and commercial?
Everything is commercial purpose loans. So we don't do any owner occupied loans. We don't do anything that involves a primary residence. Everything's commercial purpose, meaning that it has to be an investor that is sponsoring the deal. And so we'll still do a lot of residential deals. Most of what we do is bridge today, meaning that it balloons in 12 to 18 months, at most 24 months. And then occasionally, we'll consider a deal that needs longer than that on a one-off basis. But we'll also arrange financing for a portfolio of rental houses that need permanent debt. The market's moved quite a bit in that space. So rates were in the 3 to 5 range just 6 months ago, and today it's probably double that. So with the Fed raising rates, and
I hear they're doing it again.
They're talking about 75 to 100 basis points. But they have a mandate to curb inflation, and they're not gonna stop until they do that.
So in Canada, and now I'm just completely left turn. In Canada, they stopped investors from buying residential to really just stop the ungodly appreciation that, well, it's been a boon, it's been great, but it's not good for the general populace that can no longer afford housing. I see it as like Canada, they're dealing with that risk and issue by saying, hey, you can't invest. Here, it looks like the government is just increasing the interest rates to make it less attractive to invest. I don't think it's gonna work, but I'd love to hear your thoughts and opinions just kind of on what's going on with the government and the real estate market.
My personal opinion is little government involvement in the markets as possible, but there is a lot of backlash around big private equity groups, the Blackstones of the world, the BlackRocks of the world, these big institutional funds buying up and gobbling, the housing stock, across America. And I think it's there's a justified sense of anger across a lot of parts of the United States and maybe even the world, where you're trying so hard to get ahead, and then you feel like you just can't have that American dream. So I feel that side as well. My thought around it is, there's a time and place for large institutions to come in, because they're also the ones that's backing a lot of these groups that are fixing these homes, flipping them, and recreating a renewed housing stock in blighted areas. So some inner cities, an individual investor just generally isn't going to be able to get financing in a certain part of town because it's an all cash transaction otherwise. And so I think there's also a lot of good things that come around with institutions being able to provide some liquidity to make that transaction happen and create additional housing stock where it might not have otherwise been able to get done.
So my gut feeling and why I don't think it's going to help this increasing the interest rates, and Fed, please just stop. The interest rates are going up, the rents are going up even faster, and as a country, we're losing that American dream of, I want to buy my house, I want to own my house. I'm glad that we're old enough that we were able to lock that down. That's not really available for so many people now. Mm-hmm. But I think that this ongoing increase of the interest rate, even if it's to fight inflation, as long as people are investing in real estate, those rents are going to go up even faster.
It's true.
And so I really don't think that the feds are helping America by trying to kill the economy, which is literally their goal, by making borrowing for real estate more painful, which is just going to bring more pain on the renters of America.
Well, we have the supply side as well, right?
Yeah.
So there's, according to Freddie Mac, there's 3 to 5 million housing units that we need that we currently don't have to provide to the current flow of homeowners looking to buy homes. The process of getting building permits is not easy in most places across the country. So we have to do something about the supply side of it as well. There's a lot of different components of the conversation. There's this NIMBYism across the country where we're fine with building housing stock, but not in my backyard where the way it is already. So there's a lot of different pieces to the conversation that I think everybody has a unique angle on it, depending on how you look at it.
Getting back to your business, what does it change about your business?
Well, it's an interesting question. So the last few months, we've had a lot of turmoil in the credit markets, especially in the securitization market. And
nobody really even understands what securitization of loans is. Could you actually explain that a little bit deeper?
Securitization is just it's a means of financing, right? So you go and make these loans. An institution goes and makes a bunch of loans. They take this batch of loans and they get a bunch of investors to buy them, through a bond vehicle, right? And so that market has created a lot of cheap capital over the past dozen years. Okay, probably about since 2013, and it's created a lot of liquidity in the market. The great thing about it is it's done a lot for our industry, the private lending industry. It's created a lot of opportunities for lenders like myself to have access to capital to go out and lend. As you know, we've talked about this in the past, going out, raising capital, telling your story, and doing that day in, day out. That is a very difficult proposition, although it is a very successful model when it's done right and when it's done with a qualified team. In my experience, there's a lot more demand for the capital than most people can raise capital to catch up. Okay, so that's where the secondary markets were very pivotal for companies like myself. Now the problem with that is that yes, it's great money, it's great cheap capital, but it's easy come and easy go.
Right.
Okay, and so the easy go has happened over the past few months. Okay, and so that securitization market that we just talked about has all but disappeared. And Wall Street always comes in and comes out. It's just like a pendulum, right? Right now it's off. Eventually the on switch will come back on, but at this point it's shut down. And so my business as a conduit to the secondary market, it was primarily around these securitization players, let's call them. Okay. Groups that that require a securitization platform to get their money. What it's caused me to do over the past several months is reevaluate what my base of capital is for the company, and then understand that okay, we need to diversify beyond just these big Wall Street firms. So what I've started to do is talk to family offices, groups that are separate and apart from these, from the Wall Street money, if you will. Okay, life insurance companies, individual investors that have an appetite for this space.
And to kind of bring it back to what we do over at Crowdfunding Lawyers, securitization means exactly what you're doing with the apartments, with the homes, with the investments, you're just setting up a vehicle to take that asset, break it up into smaller pieces, find more capital sources. You're doing it in the debt markets just like you're doing it in the equity market. Do you ever have an interest in offering your own securitization to the little investors, or are you more relying on the Wall Streets and private equity firms to do the securitization for you?
Well, the short answer is yes, absolutely, and I think it's very, very important to make sure you have control of your capital. That's the bottom line, right? So when you can raise your offering, tell your story, go around and get people to really trust in you, believe in your platform, that money is sticky. That capital, it will be with you through the thick and the thin.
I like that word, sticky capital.
Sticky capital, yeah. It's true. I mean, Wall Street capital is great, when it's there, but it disappears overnight, literally overnight. And so the great thing about the thing that you mentioned, and by the way, yes, absolutely, that's something that's on our roadmap. It needs.
I know an attorney for you, just in case you ever want to dig in a little deeper.
I'd love a referral if you know one.
I got you covered.
It's important for any private lender that really wants to be built to last in this space to have a diversified set of capital. Have your fund, have your private investors, have your institutional capital. And the institutional capital, there's different groups even within that category. So as a lender, really no one cares about everything else. We're talking about the nuances of capital because that's what you asked about. But
right.
To a real estate investor or a developer that just needs to get their project funded, they need to know that you're reliable. And how do you become reliable is when you can control your capital, when you have that sticky capital, and you're really built to last through any sort of market fluctuations.
Love it. I know you've got some new ventures on the horizon. What are you kind of focused on? What's your next step? I'm hoping it's the Revolution Surf Club, but I have a feeling that you're probably a little bit more professional than just that. So tell me about it.
Well, the Revolution Surf Club is a real thing. We are here in beautiful San Diego, North County, San Diego, and it is the mecca of surf. So as a true, passionate lover of the ocean and everything in and around it, I think it's very appropriate that we have that badge, and we're going to continue to live through our passions. Some of the things that I'm working on are not just debt, but working with investors on equity, equity to come into the projects that I'm seeing. So think about it like this, Nate. I see probably about $100 million of deals every single month, okay? And there's that funnel that we all know, right? A lot of those deals probably just aren't a fit for our platform. A lot of those deals could be, and eventually we decide on what it is that we ultimately want to fund and be a partner, partner for. Capital, so far has been debt that we've been arranging. We have opportunities because of that large funnel to participate on an equity side, come along for the ride. That's been very exciting for us because some of these opportunities that these developers bring to us, they're just builders, they're just developers, okay? When I say just, I don't mean that.
They literally don't want to worry about anything else.
They don't want to worry about anything else, and they don't have an expertise in anything else. And so that's where we come in, okay? That's where we can come in and, work with, our investor partners and say, hey, here's the return on what a debt, position might look like. Here's where your return might look like on an equity position. Here's the pros and cons. Pick your flavor, okay? And so it took us, some time to really get an interest, from the investor community around even thinking about equity. But now that we've been doing it for so long, we're years in the game, and we're hundreds of millions of dollars, actually over $1 billion now worth of fundings. And I think there's an opportunity in that space.
That's awesome. Outlook. What do you think is going to happen over the next 1 year? And then I'm going to ask you about 3 and 10 next. What do you think is going to happen over the next 1 year?
That's a good question. Crystal ball. We're real estate market is tough now for a lot of folks. Okay, the Fed has provided a lot of cheap money since 2008, and that's where
scooping that right off.
That's where the party, was kind of fueled through, and all that money is being sucked out of the system now. And so if you believe what the Fed's doing right now, and they're really intent on on staying on track, you have to also make the connection that the real estate market will likely suffer as a result. It's tough to really predict what's going to happen other than what's front and center in front of us right now. The good news is that we haven't seen a lot of carnage in the real estate market as a whole. Okay, I think there was a lot of predictions that it was going to be gloom and doom a few months ago, and surprisingly, the economy is still faring well. The labor market is still faring well. I am concerned about rising interest rate and what it can do to our economy and the demand for real estate, especially given the fact that there's we talked about this earlier. A lot of people can't afford stuff. Not just houses, but gas, food. We have a lot of things going on in the world right now that are cause for concern. As it relates to the economy, I'm an optimist. I think you've known me long enough. I'm an optimist, but I'm also a realist. I think it's time to hunker down. Understand that winter is coming. Prepare for opportunities. A lot of
That's what I like. You can be an opportunist when things are not as rosy as it was in the past. It just it pivots.
Yeah, there's opportunities in every single market, and I think once you start to understand that, then there's no reason to power in fear.
3 years out, what does your crystal ball say?
My crystal ball is very foggy. 3 years out, it is very it's tough to say. But again, it's the answer is really it all depends, right?
Did you get your law degree? It's quite the lawyerly answer you got.
It's tough to say, man. I think I'm gonna go with I'm optimistic that globally we will be okay. I trust that there's a lot of smart people in the room that know how to navigate these geopolitical tensions domestically. I'm a big believer and always will be in America, and I think there's a resilience that will never die across Americans, and so for that reason alone, I think we'll be fine no matter what becomes of us. Because at the end of the day, Nate, you can either have a crappy outlook towards things or a positive outlook. Only one of them really does you any good.
That's love that point. What was the question that we just asked? If you and your company could make the world a better place, what does that actually mean if you wanted to?
Wow.
We're getting a little deep. We're in these beautiful meditation gardens. Started thinking about those deeper thoughts.
Yeah, I like it. Okay, so it's all right. So if my company, so I'll answer that in a roundabout way. Okay.
Very literally.
So we talked about the funnel earlier, right? There's $100 million of deal flow that's coming into our system every single month. Some of them are good, some of them are less than good, and some of them are just straight up terrible. Okay? And some of these deals that are terrible, are brought to us by people that maybe don't even really know what they're doing or don't belong in the game. Okay. Yeah. My only hope is that we are guiding people along in their highest and best self in the pursuit of life. What that means is, when we, help a company grow and help them do more deals and help them grow their platform, I believe that if they continue to do that, they will eventually find themselves in a better place to provide for their family, provide for their employees, provide better for their communities in the world. And for the ones that we don't, we typically like to have an education process. This deal isn't a fit for us because of this. We don't like this deal because of that. And I like to think that some of the best deals that some folks have ever done, that we've talked to, are deals that we advise them not to do. And maybe in some weird way, we're just putting them in the path that they really belong.
I feel the same way when I fire somebody.
And that's true. I think everybody should really look for their highest and best calling. And maybe I'm sure it's not always at the Dodson Legal Group.
Well, I don't even deal with those anymore. I fired Dodson Legal Group too. 100% focused on crowdfunding lawyers.
Crowdfunding lawyers, yes.
Do you know what the word ikigai?
Ikigai.
Great. You should look it up. There's a good book about it, and it's like how to build your best life. And it's like a Venn diagram. You have one circle, what the world needs, another circle, what they'll pay you for, another circle, what you actually enjoy, and another circle but it's like where it all comes together, what you're good at, what the world needs, what you get paid for, and you're happy. Oh, that was the difference. What your passion is and what you're actually good at. And where it all comes together is like, if you can just stay in that middle part, stay in your lane, you have the best life, and you kind of living that perfect life.
I love that.
The goal, hanging out here in the meditation gardens.
Ikigai.
Ikigai.
We should all strive for that.
Completely.